Hello, good afternoon. Good afternoon. So this is a trade I did on how I took some of my trade this week or some of my trade that is still running in profit. Others that is in loss and the rest. I think I had one SL yesterday because of I'll show you guys one nonsense mistake I did. But this is GBPNZD. Great Britain pounds and New Zealand dollar. Yes. So this is how did my analysis. This 3 months. Tend to start from 3 months. 3 months, what is it showing us? We are bearish. This is a new low break of structure. Price is buying to probably here and it will continue selling because when price came to this zone, it sold broke structure. So we're expecting a sell. So this is just a temporary retracement buy to sell. Get okay. So now what do we want to do? So we can see that in as much as structure is bearish, overall this side now, this is where we are interested in, is buying to somewhere before it continues selling. So we are bearish. We call it we are bullish, sorry. But let's see if it has gotten to where it wants to sell from 1 month. So where are we looking to sell? This is the last break of structure. You want to map out where price sold from on 1 month. Though you don't need it though, but for the sake of this video, I'll just do it. This is the break of structure. It's very very important you start from 3 months time frame in as much as daily gives more clarity or weekly gives more clarity, but it's important you start from 3 months because it tends to make the chart to be a little bit together and show the right moves that it's making. So let's look at what price did here. If you see what happened, the price make failed to create a new low, broke it, came, reacted from the other block, but break of structure, inducement here, inducement bought from this fair value gap. After I bought from this fair value gap, it broke structure, took out this low as liquidity, reacted from here and started buying. So this is what my 1 month is showing. 1 month is showing that we are still bullish, though price reacting, and price is not yet reacting from the other block. Okay, price is actually reacting from the other block. So if you have caught this on 1 month, sorry, you can just put this here. If you have caught this on 1 month, you should have sold from here. Why? When price this is the zone, when price tapped into this zone, it created a new low on weekly, failed to create a new high, broke it. So it gave this zone as inducement on monthly time frame. So anybody that this thing, most sellers will have been waiting from here to sell on monthly. People that trade higher time frame, I don't trade higher time frame. This other block here. So most of you will have been looking for sell. And if you notice, price sold here, it respected it. So we are bull here is showing that we just turned bearish. But want to go to weekly. Because this is why you understand that it's not only one time frame you are trading on. So what happened? So after from here now we can see that after price created that low, it failed to create a new low, broke it, gave an induced broke structure, came back to the origin, broke structure, took out this low as liquidity, bought from this fair value gap. When it tapped into here, it failed to create a new low as it did a change of character, gave an inducement, tapped into here and bought, took out this high on weekly. Then when it broke structure on weekly, there was no inducement because it just broke structure and started retracing immediately without taking this side. So what will you do? Either it comes back to this side here, yeah, this one now you analyze weekly time frame. You won't analyze you just analyze what happened on weekly time frame because you want to understand what market has been doing for a while. What happened here was break of structure, still no liquidity. So it took out this low because this is the field low. So in two zones that price respect after a break structure. First, it respect the BOS zone, then every internal zone becomes irrelevant apart from the field low, which is here. So market broke this structure, no inducement. It got after it broke the structure, it just pulled back immediately. So it didn't really give a clear inducement. So what happened was that weekly it took out this low as liquidity, yeah, swept it, They reacted from this origin and started buying again. So this is what happened here. So now I want to look at if price started selling from where it's supposed to sell from. Let's see. Price was trending, break of structure. So this is the low that created break of structure. So price broke it. Give this is the inducement, force pullback. Yeah. So if price should take out this zone, it would now be this telling that if price should take out this line that is here, then most likely there is not if anything here is to start looking for sell, it's not advisable to look for buy above this range. So why did we not say why did we use here? If you notice, immediately price broke this structure, it just started retracing immediately. And I say two zones are important. If either the break of structure zone or the failed low zone. So this is it. There's no failed low. In this case, there's just immediate change of character, market structure shift and inducement. So we are looking here as our DOL that we want to sell from. So until price get there, we are not looking for. If price should take others, we'll start looking for sales. You get. But for now, we are looking for buys. So me knowing this, what I did was I mapped out my last break of structure, which is here. Okay, no, I didn't. I didn't map anything on weekly. This is the only zone I'm interested in because I'm a day trader, so I want to map it from daily time frame. And you know, as a day trader, you want to align yourself with the higher time frame buyers. So notice what happened here. After the break of structure, this was the first pullback. It was valid because it came back and took out the high, so it was valid. So most likely, this zone, it invalidated this zone. So if I had seen this, I would have been waiting for it here. First, I would have been waiting. Definitely, I know myself. I'll be waiting for it. This first buy that just went in that my price took out. If I had seen, I would have taken this trade. But since price took out this one, another zone that is valid will be here. Since okay, I don't really trade breaker block on all these spares on GBP. Mostly trade breaker block on only gold and GBP JPY. So since this one failed, I know that the next zone will be this other block here on daily, and that is exactly where price is reacting from. So I think this is what I used. I used this. So now you know, since this happened, you don't just jump and start looking for buys. You get, you look at a zone that price might sell from. In this case, which you mark as your DOL, because I won't advise, in as much as you know that you're bullish, I won't advise you to target this high. Me, I be day trader. I don't look to target this high. I just look to target the nearest drawn liquidity. So I have this. This is the break of structure. This is the first probable liquidity here. So this is my DOL one. And if you remember, I target the inducement zone as my TP. I don't target supply zone as TP because for me that is the nearest round liquidity. Because I know if price takes out that zone, most likely it wants to start selling or going the opposite direction. So what do we have here? This is the last break of structure here on this thing, and this is the high that created it. This so we have a change of character. How I cut because I'm currently on this trade, so I went down to my 2 hours. If you notice, this is another break of structure here because this is the high, this is the low, this is the last break of structure here. And as you can see, there's what I call three candle inducements. So this is the market structure. For me, this is the market structure shift. This is my nearest drawn liquidity. There's no inducement here. This one, I won't for three candle, this is not valid. I went down to 1 hour. Still I didn't have anything. I went down to because if you want to take trade, you don't just come to this time and start analyzing. No. Think if you know tech crazy, you say if you're analyzing today's chart, you start from yesterday. if you are starting new week, you go through the previous week. If you are entering new month, you go through the previous month. So now, before we come to this side, we want to look at what happened at the left hand side. According to even Tony Ikes, Tony Ikes say before you go to the right, look at the left. What is happening by your left? So in my three candlestick inducement, this is it. This is not the inducement here. This is not it. This is what I took as inducement. Why? Because this candle pulled back more than this. Some people will take this, but me, I won't take this. If I won't take this trade as inducement. Nah. I think I went down to 30 minutes. Oh, but 30 minutes gave this zone as liquidity because this was the first pullback after this market structure shift. I don't trade breaker, but liquidity has been taken. I was expecting this trade, but this was where I was waiting for it. But still, what happened? Price came, we expected this breaker block. When I respected this the first time, I saw this first trade, I didn't take it. I was waiting for it here. I didn't take it because immediately price tapped into here. I knew that okay, we are now bullish, and it gave this structure shift. I knew we were bullish, and I know since it has stopped following the efficient move, the next zone it will sell from will be above here. So I was looking for buys. I was looking for buys. So this was the first trade. Then price went out, took out this high. But if you notice, when it took out this high, there was no liquidity. So what did it do? I came back. I told you two zone is important after markets, after break of structure, after a break of structure, the field low and the break of structure low. In this case, field low had inducement to this candle here as liquidity, and this is the other block here. So these two. I think I took this trade from 30 minutes, not really from 1 hour. So, so I took this from 30 minutes. So I took this from 30 minutes. So this was the second trade. Now the third one. This was the second one. So price respected it, took out this high. So now how are we going to get this one? Took out this high. So this was the break of structure. If you notice the break of structure, after a break of structure, there was no clear liquidity. So I came back to this zone again. So sorry, so call entered. So what happened here was first, since this break of structure didn't have, because this is where market broke this structure. Sorry. This was following. I'm not following this. I'm following this one that we have trading now. This is the break of structure. Let me remove this one because this is the structure shift from the left. So break of structure. This new range. This is the second trade. Break of structure, but no clear liquidity. Just this, no clear. So I came back to. I told you guys two zone becomes important after a break of structure. This first one and where market shifted. In this case, this is it. This is it. No field, no weak. This is weak low. It broke. It took out this high and this high. This is just price action, structure. So in this case, this was so this low was this thing. So this was where I was waiting for it. Here, break of market structure shift or just market structure shift, internal structure, liquidity. And if you notice, price came this our inducement zone and tapped into it, giving me yesterday equal low. So when I saw it, I was more confident. Remember, buyer structure has always been bullish. So where will I be waiting for this trade now? I think I was waiting for it. Is it 1 hour time frame? Where did I see that? I would have known. So this wasn't it. 45. Yes, this was it. I was waiting for it here. Yes. Yeah, I think this should be it. Let me check 15 minutes. Okay, I think it was 45. I was waiting for it on 45-minute time frame. So when price tapped into it, when price tapped into it, I went down to 5 minutes. Now watch what happened here. When I saw this was also this was a break of structure to the downside. Price created this low, another break of structure here on 5 minute time frame. Remember, since I had this zone mapped out for buy, I was just waiting for price to give me something that I want to start buying. In this case, what it did was I saw this sweep first. When I saw this sweep, which is also known as a weak rejection, this thing here, that price pulled up. I saw price when it started dancing here. When I saw this sweep and I saw this failed low here, this thing went up, failed to create a new low, and it started dancing that trying to break. I just mapped out this other block here, took my entry. I think the entry should be I locked it. This is it. Okay, this was the entry. Shade I already have the trade running. So this was where I was waiting for. This is how I took this first trade. Targeting this higher time frame high. This high here. This is where I'm targeting this high. Now, if you ask some people, somebody asked me now, why didn't I place my essay below this week rejection? Why did I place my essay below this last week rejection? This majorly sweep. Me from experience, I know that if price sweeps a POI like this, if price sweeps a POI like this, most likely it will break structure to the upside, and there's no way to come back to close with full candle closure below this candle. It's what I've seen. Oh. So that is how I took the trade. This is the trade here. So this is it. This was when I did my analysis. If you notice the first zone, which is here, the second zone. This second zone, I mapped it out, but I didn't take it. I don't know what I was doing. Then this is it. This is the last one. How I took it. Okay, this is 1 hour time frame. Then this was my entry. I told you I saw it when price closed up. So I knew that okay, most likely it will come back and retest before it start moving on. And this is how I cut the trade. Excuse me. I have this is what I have on gold now. I'm waiting for this. I don't know if the price will come there, but this was the first trade I took. Where gold is reacting from now. This is the first trade. So this was me looking for confirmation. Same with this US30. This one, this is the entry. I think I should have US30 here. This is US30. I'm waiting for it. But it don't leave me. So this is the first entry. This is where I'm waiting for second entry to take out this equal high. The gold setup. This is good here. This is first one. This is where I'm waiting for it to take out this high. Um, I still have something on. Shit. This is Japanese 225. I'm waiting for it to come back to this zone. Where it's reacting from for me is liquidity. This is my main POI here. I need this low to get taken out. So I still have other these Japanese baskets. Is GBPJPY. I'm waiting for price to come in, then I'll use confirmation entries to take it here or this zone. I don't know because these things, this equal low, I don't want to use limits by because of this equal low here. And I took it from I think 30-minute time frame. That's it. This low as liquidity, then targeting the nearest deal. That's it. That is all. Thank you. Hope this video has helped. The major thing I create is structure, liquidity, and point of interest, but structure is the key this thing is the key component of this strategy of what I trade. Liquidity is just three candle inducements and normal pullback inducement, SMC inducement, everybody knows. Then PI, other block, good.